People often ask me if I'm still investing, and you know what? I will always invest when I see. Hi everyone, welcome back to my channel. Today we have an incredible, exciting and valuable topic to discuss: how to build substantial wealth with cash flow properties during a recession. As we know, economic downturn can create a unique opportunity for savvy investor, and I want to share with you my own experience of building substantial wealth during the market downturn in 2008. So let's dive right in. If you are new here, please consider subscribing and turning on the notification bell so that you don't miss any of my future videos. My name is Korianne. I'm excited to share more of my real estate investment journey with you. Let me share with you that I am not an economist, but I am actively aware of the current economic environment as a way to protect my investment assets. I have seen home prices dropping in the last few quarters due to the overpriced housing prices, where the median household income in those markets could not support those price points. In addition, the interest rate for 30-year fixed mortgage has gone up to a little over 7% as of recording in July 2023. The expensive borrowing costs keep new home buyer out of the market. In my opinion, decline home price and natural aspect of healthy housing market, unsustainable prices cannot persist in the absence of a demand. Let's look at one specific market like Seattle, Washington. As of June 2023, the median home price is stand at $826,000 based on data from Redfin.com. In September 2022, the median household income in Seattle was $110,000. Assuming, let's be generous here, a 10% increase in the median income by the time of this recording in July 2023. The median household income is now approximately about $121,000. If you are a buyer in the home price of $862,000 with a 20% down at a 7% interest rate for a 30-year fixed mortgage, the monthly mortgage payment come out to be $52.29 per month. The median income of $121,000 per year yields a monthly gross income of $10,083 per month. If a buyer with a median household income of $10,083 per month, they will have a difficult time paying for the mortgage payment or getting approved for a mortgage with a bank, because they would use up more than 50% of their income to pay for their housing expenses. That is, if we divide the mortgage payment of $52.29 by the monthly gross income of $10,083, we will get about 51.8%. By the way, this ratio is also called housing debt to income ratio. I am not counting other liability debt payments. Most lenders like to approve loan for borrower holds debt to income ratio of 28% or less. Some may stress up to 35%, but keep in mind that you will end up paying a higher interest rate, which means you will be paying out more for the loan. So with that, right now, I won't invest in Seattle market because most of my renters simply cannot afford the rental payment. I may consider investing in Seattle market when the median home price go down further to make more affordable. People often ask me if I'm still investing, and you know what? I will always invest when I see the numbers adding up. Right now, Seattle isn't the market for me, but I would definitely take a closer look if the median home price become more affordable for renters. And also the median household income need to increase. Recently, I make a move and acquire another wholesale property in Austin because it just makes sense financially, and it's a small project, but it's a great opportunity for my younger son to learn the rope. Who knows if he's up for it? He may even take on the new ground up development with this property. The best part is we got it below market value, and we have got a few exit strategy lighting up. So I got to stay open to possibility and make smart choices. If we are in the recessions, then how can you build substantial wealth from it? Before we dive into the strategy that can help you build wealth during recessions, let's talk about how you can prepare for it now. The key to success in any market conditions is being proactive. Start educating yourself on real estate investing and cash flow properties. Understand the local real estate market. Keep an eye on trends and build a network of like-minded individuals. When the recession hits, you will be ready to seize opportunities. You will recognize any market condition when you buy, exit, or trim down your position in their assets. Let me take you on a journey 2008 recession. Back then, properties was surprisingly affordable, and the cash flow potential was fantastic. While others held back in fear, I strategically invested in cash flow properties, taking advantage of the market downturn to build solid foundation for my wealth. In the normal market conditions, I managed to earn respectively 7 to 9% cash-on-cash return on our initial capital investments. However, during the recession 2008, that return jumped up to 10 to 14%. I used opportunity to flip properties and accumulate cash reserve, allowing me to invest in better properties in the prime locations, all fully paid with cash. Cash flow properties are an absolutely gem during recessions, providing steady income stream month after month. Even when the property value fluctuates, you can count on rental income to weather the storm. The key is choosing property with high rental demand and positive cash flow potential. That way you won't just survive but thrive during tough economic times. Trust me, it's a game changer. In 2006, at the peak of real estate market in Austin, I purchased property from a big bank at the right price for monthly cash flow. In 2008, property value dropped by 20%. But I hold on as they sustain themselves. Today, those property has appreciated threefold since 2006, proving that it is important to buy properties that generate positive cash flow from day one. Now, let's explore some strategies for building wealth with cash flow property during recessions. Number one is exercise patience and prudence. Don't rush your decision. Take the time to find properties with solid cash flow. Research thoroughly and conduct due diligence before making any move. Number two is leverage your network. Connect with experienced investors, real estate agents, and property managers. Their expertise can be invaluable during uncertain times. If you are expanding to a new market, start forming a power team consisting the property manager, real estate agent, attorney, home inspector, appraiser, and contractors. Number three is master the art of negotiation. During a recession, seller may be open to negotiations. Seize this opportunity and aim for favorable terms when purchasing properties. With current seller benefiting from low mortgage interest rate, you may need to get creative and work with wholesale investor for a steady stream of project to invest in. Always look for projects with built-in equity or below market value. Number four is embrace the long-term approach. Remember, real estate is a marathon, not a sprint. Concentrate on building a substantial portfolio that can endure economic fluctuations and steadily grow over time. With the right strategy and mindset, you can thrive in any market conditions. Keep in mind that every recession brings great opportunities for those who are prepared and ready. Building a diversified portfolio in cash flow properties can lead to substantial wealth and financial independence. Seize the moment, educate yourself, and embrace the possibilities. Let's make the most out of the next recessions. I'm going to make a simplest plug here. If you have not read my book, I would recommend that you do. Some of my readers have purchased their first investment property, and some have expanded their real estate portfolio while they are holding their full-time career. If you need more support, check out a few online classes that I offer. I put this link in the show note below. That's it. If you found this video helpful, please don't forget to hit the like buttons and subscribe to my channel for more insight on real estate investing and mastering your personal finance. Also share your thoughts and experiences in the comment below. I would love to hear from you. Thank you so much for watching. And until next time, stay proactive and prosperous. Let's learn, invest, and make an impact. Ciao!